Hello there, it's David here from Dingle Lane again. And today what I'd like to do is have a chat with you about something called free cash flow. Free cash flow is slightly different from your normal operating cash flow because what it does is it measures how much cash is being generated by your business after your capital expenses such as buildings and equipment and things like that. Now, why is that an important concept to worry about? Well, basically, free cash flow can be used in a whole variety of ways, but particularly it's really useful when you want to do business expansion, when you want to pay down debt, or whether you're looking to increase the amount of withdrawals from your business, either in terms of dividends to your investors or potentially drawings to yourself if you're a sole trader business. Particularly, as I say, if your business is growing, if you're looking at business expansion, free cash flow is really, really beneficial. Now, you may have heard from various places, and I use it all the time, that you can't pay bills with profit. Whether you're talking operating expenses like salaries, utility bills, whether you're doing capital expenditure like building a new factory, buying a new lorry, whatever, it all takes cash, no matter what accounting system you're using in your business. And that's why I keep banging on about cash flow, because it's your business's ability to generate cash that really matters. Now, some of the key reasons why free cash flow is important, probably worth running over for you. So, 1, it provides your business with growth opportunities. Free cash flow gives you the means to add additional locations, expand your current operation, get new equipment, bring additional employees on board. Really useful if you're growing. Secondly, it can help attract investors. If you're at a stage in growth in your business where potentially you're looking to bring in other investors or even maybe to sell off your business, free cash flow or consistent free cash flow, because it's a thing over time, of course, is particularly important because it shows how much cash the business currently has to use, signaling to investors that the company's got the ability to pay down debt, buy back stock, pay dividends, give them a reward for the money they're sticking into the business. And thirdly, whilst it's not the only indicator of financial health, it's a really good indicator of whether a business is stable and whether it's likely to stay in business. Quite a good overall measure of health. Bit like temperature, really, I suppose. If your temperature's normal, great. If you've got a high temperature or a low temperature, you ain't doing so well. Same with free cash flow. So how do we do it? Well, there's several ways of doing it. Like most things in accounting, we like to make things complicated for everybody. But the most common method is the easiest, which is always a good place to start, which is your cash flow from operations less your capital expenditures, giving you your free cash flow. Now, typically, because of the volatility in cash flow, the volatility in free cash flow, you'll find that it's best to observe it over a period of time, more than several quarters, even more than a single year, probably over a couple of years, because then you've got a consistent picture of how things are going, and also it then smooths out seasonality and things like that. There is another slightly more complicated way, particularly if you don't already produce a statement of cash flow for your business. And for this, you'll need your income statement and your balance sheet, because you've got to start pulling the numbers off of that. And basically what you do is you take your net income from your income statement, you add back your depreciation and your amortization, you take away the changes in working capital, so that's the changes of your current liabilities and your current assets. You then take off your capital expenditure, and that then gives you your free cash flow. Lovely accounting terminology, but you can work it out. Then you can say, what is this then telling me about my business? Of course, having a substantial amount of free cash flow says that you've got plenty of money to pay your bills, with a healthy amount left over that can be used in a whole variety of ways, including distribution to investors. Businesses with a good free cash flow can also look at expanding or acquiring other businesses to add to their portfolio. So, great for helping you to expand. It can also tell you whether there are the possibility for future earnings to increase. Consistent free cash flow indicates a possible surge in future earnings, making the business a much more attractive investment opportunity. But equally on the negative side, whilst just about every growing business has faced negative cash flow at some point, consistent low or negative free cash flow might indicate that your business needs to look at a possible restructuring in order to raise free cash flow levels. In the end, however, whatever you do to measure your company's success, it relies on you having an accurate accounting and reporting capability within your business, preferably in real time, because then you've got the chance to act on it in a much more sensible way. So checking what your accounting system can do for you is absolutely important. Now, technology moves on at a hugely rapid pace. And certainly if you haven't reviewed how you collect and store your accounting data, you need to do this again really soon. Look at what you're doing, what you need to be doing, what you can do. And sometimes it may even be worth just reviewing, even if you think your accounting system gives you all you need, have a look around at what's available in the market, because you'd be surprised what new ideas are coming out and what new tools and techniques are coming out that can really give you valuable information to help drive your business forward. As always, if you've got any questions or you want to discuss your options on anything I've said, feel free to get in touch. Go to www.dinglelane.co.uk. Give us a call. The telephone number's on the site. Drop us an email. Come to us on Facebook, LinkedIn, Twitter, whatever. More than happy to have a chat with you and talk through how we might be able to do something together, or equally just to have a chat. Why not? Over a cup of tea and a cup of coffee. Always good to do in a lockdown situation. Have fun. It's David Nichol here from Dingle Lane. Have a good time. Nanu nanu.